If you started doing this like 3 years ago, did you just have a bunch of money sitting around that you like had to put somewhere? Or what were you thinking about when you were like at this, I'm guessing 65 and thinking,
I was about to turn 65, I
Yeah.
think, because it was the first property I got was May 2021. And I would have been turning 65 in June 2021. Yes. Well, part of it is that was a point in my life. I wanted to get going a little bit earlier than that, but I just sold a couple of businesses in 2019. It kind of affected a little bit the DTI situation. I kind of get that straightened out. I did have some capital from that coming in, and it was kind of a little bit of a flux. In 2020 is also when I went to work remotely for Intuit. They kind of recruited me. And so that allowed me more flexibility because of the DTI thing, because of course, one of the reasons I wanted to get into that time was conventional financing was awesome as far as the rates for rental properties goes and everything like that. I mean, we were getting money at 3.5, 3.6,
That's right.
3.7%.
Yeah.
30-year fixes.
The deal was the debt back then.
The deal was the debt.
Yeah.
So once I got in there, got that straightened out, I stretched to get as many properties as I can as quick as I could, because I've been around a while, and when I hear record low interest rates, that means it's never happened before, and don't expect it again, and don't expect it to last forever. So, it was a scramble at that point. I think I planned on getting 5 properties by 2023. I did that by the first half of 2022 because I really stretched everything I could.
I want to tap into that stretch, right? Because we tease this show as like one of the most creative fundraisers out there for real estate capital. But before we do that, when you were telling people this plan, when you were told people like at 64, you're like, I'm gonna try to push some chips into rental properties right now. Did people look at you funny? Were they like, why are you doing that at this point in your life? Like, what was that reaction?
Well, unfortunately in our society, people don't really understand real estate and income producing assets as a whole. Not everybody has read Rich Dad, Poor Dad, which is kind of the primer that got a lot of us started on this and everything like that. And you're not taught this kind of stuff in school. I mean, I was a planner at one time and everything like that. And it's all about time in the market and not timing the market kind of thing, just passive investing in the stock market and everything like that, grow your nest egg and everything like that. And we're just not taught this. Our parents typically don't teach us this because it's not something that's kind of passed along. So you got to go outside the box. And I think wealth builders and bigger pockets have done a great job in kind of educating people, but that's where you got to get educated. You don't learn this stuff in college. The idea of income producing assets was kind of very appealing to me. Also, I don't plan on passing when I'm 70 years old. I'm 67, but I keep in good health. I don't take any prescription medication at all. The thing is,
you intermittent fast from time to time. You were just talking about it.
Literally every day. So it's a question of that just because you're in your 60s and retiring doesn't mean that you don't have to plan for the next 20, 30 years. And the nice thing about income producing assets is basically the assets pay you income and money without depletion. In the stock market, you start to get a plan where you're starting to take money out and everything like that. And your assets will deplete sometimes slowly and everything depending upon how things are going and everything like that. The nice thing about real estate is the asset stays there and it just pays you. And the longer it is, the more it pays you because, as you say, you got the principal pay down. We got our famous 5 profit centers.
5 profit centers.
Yes. And as you say, especially if you get fixed debt and everything like that, that stays the same. Whereas rent growth comes in. You can also do things like I want to give a shout out to Ricci and the girls over there. They've done a great job. We restructured a lot of my insurance. That was a great show that Whitney did. Kind of gave me a lot of ideas there that I brought up with them. And I'm actually paying less in insurance this year than I did last year.
Interesting.
Because of some of the way we structured some of those things. And now that I'm in Florida, now I've also got them bundling lots of my insurance together.
Bundling.
So I'm always looking for ways to create more value and to do that because it just kind of tweaks things. Part of that is I'm an accountant and I have a math degree, got into accounting and corporate finance. So I like this sort of things, and a lot of it is, it's fun to me too. People say, well, you've got all this stuff, you got all these financing, you're moving around, you got all this debt to pay attention to and all that stuff and everything like that. I love that. Playing with money and finance, it's all numbers to me. I've always loved math. I love playing with it. To me, it's a hobby as well. It's something I enjoy doing.
I want to get into your ability to be a financial engineer. One of the things that I want to call out is this income producing assets, right? Like, how do you build a portfolio of income producing assets in this discipline of category design that I really, really care about? I think it's a really good way of like influencing people and educating people. They talk about this point of view of when you're creating a new category, the context, what's missing, and the new innovation creates a new category, right? And to me, the context is that we're living longer, right? We are living longer. You are a prime example of this, right? You're in 68, you're in great shape. You look like you're in like
67. Don't make
60.
me an old year.
I got
older
you,
than
buddy. I
am.
got you, buddy. You're in great shape. You don't plan to, like biohacking was not a thing 10, 20 years ago, right? Like people are really understanding this. And as technology accelerates, we're going to continue to live longer. And what's missing is this idea that if we are living longer, then all of these paradigms that we all used to believe in, that was, okay, well, I just got to have enough money till I get to about like 80. And the rest, I'm just going to let it ride. So I just need to build this like nest egg that starts to deplete, like you just said, at a certain point. If you build up a nest egg of stocks and bonds and it starts to deplete after a certain time because you start living off of it, that starts to create a problem if you start living considerably beyond 80. And that's where we're headed. So your solution of the new innovation is cash flowing assets, which essentially is building a cash growth portfolio, right? A portfolio that is not like a net worth portfolio that then spits out cash, but a portfolio that grows in cash flow over time because rents increase. Your costs stay the same. At some point, you pay down your mortgage completely, right? So like rents continue to grow is something that we really need to start thinking about at your age.
Yeah, don't forget depreciation, which is really,
And appreciation.
in the right market is the number one profit center, and it's kind of like, outliving your money is truly one of the catastrophes of our time. It's not a pretty sight when somebody outlives their money because, they've got used to a certain lifestyle for many, many years and having to cut back on it when you're at your most vulnerable. That's a tragedy.